Good day, all. Ira Epstein with your metals market update, and this is for Thursday, the 7th of March, 2019. We're about 3:30 p.m. Central Standard Time. They're just reopening the stock indices. You're looking at about where the settlements are going to come in today. Yes, you're looking at a right price in the euro, down sharply. The U.S. dollar index, new highs for the year, new lows for the year in the euro currency, and contract highs and lows. You got to look at that too, which is weighing on the metal markets because the dollar's so strong. And the culprit in this case happens to be the European Central Bank. And if you get up and you watch what Mr. Draghi did early this morning, who's the president of the European Central Bank, basically they put in a short-term fix where banks can get more money to loan, but the problem is they're cutting their growth by 0.6 of a percentage point all the way back for this year to what, 1.1%, next year 1.6%, the year after 1.5%, not very stellar numbers. And you got to ask yourself, why did they stop their QE program in December if they're already putting in this TLRTO program where the banks are able to get for a 2-year period a certain amount of money that they can lend out that has never been a popular program? I question the whole thing, and the market did too, so it's not what Ira Epstein thinks. You can see how the markets responded to it. But as a metals trader, we seem to be in something of a down thrust where the market is moving back from 1320, 920 down. And the reason, in part, is you've got a strong dollar and no inflation. That is basically what you heard from the ECB right now. They're not seeing the inflation. Canada yesterday didn't see the inflation. We're not seeing it. If you watched today, some of the Federal Reserve governors talking again, they've been doing it all week. Inflation is not an issue right now. Yes, a little wage inflation, but not product inflation, and we're seeing that way on some of these markets. This is how the April chart has gone, and you can see what it's doing. Now, as a market technician, throw the name off the chart. If you take out 1291.80, you break the pattern of lower highs, lower lows. To me, that puts a pause on this phase of a bear leg. Number two, if the market keeps going down, a possible objective could be a longer-term average of the 100-day moving average of closes. Number three, the lower Bollinger Band is right here. Now, if you'll recall, we were under it, and I said the odds favor we're going to move to the right-hand side, which we did. But instead of getting a good bounce from that, the market fell back, as you can see, like it's doing now. So I go to momentum. Where is that? And now I'm getting concerned about momentum. As you see, both numbers in the blue and the red, the K and the D lines as they're called, are under 80. I'm sorry, under 20 in this case. Yesterday they were both under 20. Tomorrow's a real important day. If both numbers are under 20 tomorrow, then for whatever length of time it's going to happen, you get what we call embedded. You convert the market from being oversold to locking in a more bearish trend, which then gives a higher probability of getting down to this 1273.40 level. When we come to GLD, let's take a look here first. Both numbers are under 20. Both were under 20 yesterday, not the day before. So I have the same pattern there. This market is what we call had been running the lower Bollinger Band, got back over it. Now the question is, does it come down to it? Unlike the gold futures, this market has an outside day down today. Now let me explain what that is. When you have an outside day down and you take out the high of an outside day down, I believe it throws out a warning that the market has ended a pattern, could catch a group of traders that are short down here, and I look for where the market might rally. In this case, if that happened, and if you did not get the embedded reading, it would favor a return to the 18-day average of closes. If you get the embedded reading and you don't take out that high, I'm looking for the lower Bollinger Band. So there's all kinds of variables in here. There's even another one, obviously, take it out and embed. In the GDX, which are the gold miners, you can see the market is just developing the sideways action. It too is in a bear trend, the lower highs, lower lows. What I said when it hit the lower Bollinger Band that I thought the pros had taken money off the table, looks like they did. What would help this market? Well, let's go and analyze. First, we come here. You don't have both numbers under 20. You're plain oversold. So you cannot get the embedded reading, which is good. In other words, not going to convert from locking in that bearish momentum. But it is bearish right now, but it is stretched out. If the market were to take out right here, 2197, you would break the bear pattern of lower highs, lower lows. Could get short covering. Maybe you kick up to the 18-day average of closes. Another part that's kept me, at least, into the bear camp has been the fact that the gold-silver ratio has been moving higher, which favors gold over silver. As I have said before, and numerous times, generally, and that's all I can talk on charts, generally speaking, bull markets in metals are accompanied by the metal markets themselves gaining a bit on the gold. We're not getting that. When I look at silver, it's just been in a free fall. And if we look at the slow stochastics, both numbers are under 20 today. They were under 20 yesterday and the day before. This is an embedded reading. So on the rallies, what was resistance, which was the 100-day average, as it came down, you can see how it was playing there, trying to figure out what to do. Certainly these 3 days, then it started backing away, and today it's further. That might become the first resistance point. More important to me is I think there'll be bear traders. In other words, the bears waiting here to sell this market until that red line closes back over 20. When that occurs, you might make a run if you're over the 100-day average at that point for the 18. Or if you're well under the 100, then the 100 becomes the goal. In the copper market, since you lost the embedded reading right here, this day, which was Monday of this week, I've been telling you I think that price and the 18-day average are going to come together. Now, it's not a market call. It's not what I'm saying. What I'm saying, the odds are momentum leads price. You make your own trade decisions. I don't do those here. I do those in my morning subscriber video. What this is, if one's long, it might be a warning sign that, hey, the upside momentum's out of the market. So here you are. This was through today. And now, there you are. So, am I right? I don't know yet, but it certainly looks like the two want to come together. And when they do, it's like a pinball machine. At that moment, I say, the market's back in what we'll call balance. It doesn't owe anything from that. Now the question is, what next? Close under the 18-day average, you'd have lower highs, lower lows, bias down because you'd be under it. Right now, you've got the lower high, lower low, but the bias is up. It's a very difficult trade, and momentum is trying to point down. A lot of divergence. In the April Platinum, we were looking, at least Ira was looking, for price to hit the 18-day average when you lost that number. So what you did today is you came down and you dropped pretty hard here. You're well under everything. You've just come from, what, 879 to 814. It's a heck of a drop. You took out the last break low. It's just a question now of money running out for people. I've been there. I've made these trades. I've done everything probably wrong in the futures market that a human being could be. I used to laugh because I had my TV shows, and I would tell people, if you really saw me, I'm like a piece of Swiss cheese, holes everywhere, because I learned the hard way. I remember, I'd go as far as lighting candles. I know you're laughing at it. I have one in my office. I was in Rome, and I said, I need a candle here to help me out. You do anything when you're wrong in a market, right? But you learn and you learn. And the hardest thing, and you know I'm right on this, is disciplining yourself. Right now what the market's doing in the palladium, same thing. You've lost your upside momentum. The odds favor, it doesn't mean it has to happen. The odds favor that price and the 18-day average are going to make a run at each other. Do they have to? No, but it keeps a person like me then saying, okay, I got the swing line down, the bias up, and momentum says I should be breaking down more. I wait. In the dollar index, up and away. So now we finally got to, and it wasn't so much dollars, the European Central Bank that did this one. The market with this goes up and over the upper Bollinger Band. Now, I realize that when markets get up here, you go, it's a runaway. The problem is, if you look back on the spikes up to the Bollinger Bands, they generally don't stay over it very much. They don't stay under it either. Do your homework. So, it's great, but I think the pros were coming out of this market today about 30 lower, 25 lower in the 97.31 level. You are overbought, you've hit an extreme, and you can go higher. So, what I do for myself and for you is in the morning, and for you it helps. In the morning, I review the charts. I've been at this 5 decades. I have done a lot of things, and believe me, I still do them wrong. I still do them right. The difference is I'm disciplined. So what I do is I've learned to work with indicators I'm comfortable with. I get people that'll come in and say, Ira, your morning reviews, they come out at this hour. They come out at a certain hour, which I record at 8:30 a.m. Chicago time. What time's the U.S. stock markets open? What time does the meat market open? When do they reopen the grains for the morning session? When do they reopen the pits for the options? I do it at 8:30 a.m. Central Standard Time because I want the markets open. My recording takes about 10-15 minutes. Then it renders, and they're typically posted by 9. I had a question come in the other day. You know, can I help somebody out with a different ETF? Why not? So I put an ETF in here. I think it was QQQ today in the NASDAQ. Somebody asked a question on that. If you ask me, I try to work things in. And the idea here is that I'm going to be able to give you what I see in the market. How often have you been caught, like I have, where you're going, I like this trade, but boy, look at this. I wish I had somebody to talk to. And in our building, there are people to talk to. In my office, there are people to talk to. Unfortunately, when you're home by yourself, you're trying to make a trade, or your office, doing whatever you're doing, trading's a private thing. So I try to cover all that with chart action, trade ideas, and I really throw the specifics at this. And the rationale there is another voice that once you get to know me, you know I'm going to be consistent. Right or wrong, I'm going to be consistent in my approach to the market, and I'll cover the same things the same way. And that is what I needed, and I'm hoping that what I need might fit in with what you need. What does it run? $7.95 for 30 days. Then see if you like it. You don't like it, the heck with it. After that, a yearly subscription is $13 a month, $156, or $15 a month every 30 days. And no, it's not per month. I go by the days. The computer will keep track of that, so it doesn't matter what day of the week you come in. How do you get this? Give us a call. You can go to our website under the words what? Education. Under the words research, go down to morning subscriber video. Away you go. If you're watching me on YouTube, just click here. It'll take you right to that page. I'm Ira Epstein. Have a good day.